Hey everyone, welcome back to the channel. Today we're diving deep into a comprehensive analysis of Lam Research Corporation, ticker LRCX, one of the heavyweights in the semiconductor equipment space. If you're looking to understand whether this stock deserves a spot in your portfolio, especially with all the buzz around AI and chip demand, stick around. We're breaking down everything from financials to recent performance, valuation, and more. Let's get started. So, why are we talking about Lam Research today? Well, this company has been making waves in the semiconductor industry, and with the tech sector driving so much market momentum, it's a name that keeps popping up for growth investors. I want to give you the full picture, how they're performing, what's driving their business, and whether the stock is a buy at current levels. We'll cover their latest earnings, financial health, and even a SWOT analysis to weigh the pros and cons. If you're new here, make sure to smash that like button and subscribe for more in-depth stock breakdowns like this one. Let's kick things off with a quick overview of who Lam Research is. Based in Fremont, California, Lam Research has been around since 1980 and is a global leader in designing and manufacturing semiconductor processing equipment. Their tools are critical for fabricating integrated circuits. Think of them as the behind-the-scenes enablers of every chip in your phone, laptop, or data center. They operate in key markets like the US, China, Taiwan, and Korea, with a workforce of about 18,600 employees. Under the leadership of CEO Timothy Archer, they've positioned themselves at the forefront of tech innovation, especially as demand for advanced chips skyrockets with AI and 5G. Their business model is built around system sales and customer support services, which gives them a nice mix of high-margin, recurring revenue. Now let's talk numbers, starting with revenue. For fiscal year 2025, Lam Research reported total revenue of about $18.4 billion, a solid figure that shows they're capitalizing on the semiconductor boom. Breaking it down by segment, their systems business, essentially the equipment they sell, brought in roughly $11.5 billion, while customer support and other services contributed around $6.9 billion. That services piece is huge because it's a steady stream of income even when equipment sales fluctuate. Geographically, China was their biggest market at $6.2 billion, followed by Korea at $4.1 billion and Taiwan at $3.4 billion. The U.S. market chipped in about $1.4 billion. This spread shows how dependent they are on Asia, especially China, which could be a double-edged sword given geopolitical tensions, but it also reflects where the bulk of chip manufacturing happens. Moving on to earnings, Lam Research has been crushing it lately. In their fiscal year 2025, they posted a net income of $536 billion, translating to an EPS of 4.17. That's a significant jump from the previous year's $3.83 billion net income and 2.91 cent EPS. Looking at their most recent quarterly results for Q2 2026, they beat expectations with strong revenue growth and provided robust guidance for the next quarter, signaling confidence in sustained demand for chip-making tools. Their operating income for FY 2025 came in at $5.9 billion, reflecting healthy margins despite rising costs in the industry. This kind of profitability is a testament to their ability to manage expenses while scaling revenue, a key indicator for long-term investors. Diving into some of the commentary from their latest earnings call for Q2 2026, management highlighted record revenues and emphasized their strategic focus on AI-driven demand. They're seeing strong orders for tools that support advanced node technologies, which is critical as chips get smaller and more complex. They also talked about expanding market share by addressing clean room constraints, a bottleneck in the industry, and leveraging technology transitions. This optimism about future growth, especially in AI and data centers, aligns with the broader trends we're seeing in tech, and it's a big reason why analysts are bullish on their outlook. Let's take a closer look at their financial statements to see how solid their foundation is. On the balance sheet for FY 2025, Lam Research had total assets of $21.3 billion, with cash and equivalents sitting at a healthy $6.4 billion. That's a nice cushion for R&D or strategic moves. Total liabilities were $11.5 billion, giving them a debt-to-equity ratio of about 0.44, which is quite manageable for a capital-intensive business like this. Their current ratio stands at 2.26, showing good liquidity to cover short-term obligations. On the income statement side, their gross profit margin is a stellar 49.8%, and net profit margin is around 30.2%, both of which highlight their pricing power and operational efficiency. Return on equity is an impressive 62.6%, meaning they're generating serious value for shareholders. Cash flow is strong too, with free cash flow for FY 2025 at $5.4 billion, up from $4.3 billion the prior year. This gives them flexibility for dividends, buybacks, or reinvestment. Now let's tackle valuation. At the current price of around $229 per share, Lam Research has a market cap of roughly $286 billion. Their trailing PE ratio is a lofty 46.8, which might raise eyebrows for value investors. However, when you look at the forward PE for 2026, it drops to around 46.8 at the midpoint, suggesting the market expects earnings growth to catch up. Their price-to-sales ratio is 14, which is high, but not unusual for a high-growth tech name. Comparing this to the semiconductor industry average PE of about 71.6, LRCX actually looks relatively reasonable within its peer group. Enterprise value is around $287 billion, and with a free cash flow yield of 2.3%, there's still room for upside if they keep executing. The dividend yield is small at 0.42%, so don't expect much income here. This is a growth play. Overall, the valuation seems stretched, but it's justified if they maintain their growth trajectory in AI and advanced chip markets. Let's break down the strengths, weaknesses, opportunities, and threats for Lam Research in a quick SWOT analysis. Starting with strengths, their record revenue performance and leadership in semiconductor equipment give them a strong moat. They've got high gross margins and a solid balance sheet with manageable debt. Weaknesses? Their heavy reliance on the Asian market, especially China, exposes them to geopolitical risks. Also, the cyclical nature of the semiconductor industry can lead to volatility in their numbers. On the opportunities front, the AI boom and demand for advanced nodes are huge tailwinds. Lam is well positioned to capitalize on tech transitions. But threats loom large too. Supply chain disruptions, trade tensions, and competition from peers like Applied Materials could weigh on growth. Plus, if the broader market cools off, high valuations could lead to a pullback. It's a mixed bag, but their strengths and opportunities seem to outweigh the risks for now. Looking at recent performance, Lam Research's stock has been on a tear. Over the past week, it's up 6.55%, and over the last month, it's gained 7.68%. Zoom out to 6 months, and you're looking at a staggering 100.51% increase. Over 1 year, it's up 182.39%, and over 5 years, a whopping 310.91%. This outperforms both the broader tech sector and the semiconductor industry averages over most timeframes, showing incredible momentum. That said, a recent Forbes article noted a 10% drop over 2 days, likely due to market-wide sell-offs, but they argue it could be a buying opportunity given the stock's fundamentals. On the chart, we're seeing it trade below its 52-week high, with potential support around current levels. If you're thinking short-term, keep an eye on whether it holds this support. Could be a chance to get in if momentum shifts back up.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com. and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.